Hi, good morning or good day. It's Friday, 6th of April 2018. Welcome like every business day to Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, and maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is quick and smart, but for that daily. So let's have a nice start like every day. And in a couple of seconds, Dirk, the day trader of the day, will speak about the markets. But of course, we will start like every day with a disclaimer. Forex and CFDs are leverage products and can result in losses that exceed your deposits. If you're a starter, please start with a demo account and make yourself familiar with leverage trading, long trading, short trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and everything will be displayed there. This is me. My name is Jens. I'm talking from the Berlin office from Admiral Markets, so my English is made in Germany too, but hopefully some of my quality too. But I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's day. On Tuesday, it's Paul's day. On Wednesday, it's Giancarlo's day. On Thursday, it's Inat's day. And like today, on Friday, it's Dirk's day. Our leading day traders live every business day to the same time, screening the markets and the trade of the day. Yeah, and of course, if you like to trade Forex and CFDs, we would be happy if you do it with us. Many benefits you only get with Admiral Markets. For example, one of our bestseller DAX 30 CFD, typically spread of just 0.8 points to the main trading hours. Mini lot trading, so you can start with 0.1 lots and choosable leverage and many things more like safeguards, like our negative balance protection policy. Check all the details out on admiralmarkets.com. There you will find also something about our regulatory background, and of course you find how to contact us, call us, send us an email, or visit the other channels from us like YouTube or Facebook. Everything's linked from admiralmarkets.com. This was my side. Now it's time for Dirk. Hi, good morning, good day, Dirk. What's your view to the markets? It's your time now.
Yes, good morning, Jens. Good morning, guys. A couple of days back, we have been talking about this trade war stuff a lot of times, and as you maybe heard about it, Donald Trump this at night, Thursday night, started with another leg of trade tariffs. Before we get into this details, the chart technical details, for example, from the German DAX, let's have a quick view on that kind of table I brought you. Maybe you can see something around that. Maybe you can see it. Of course, it is a German one, but I will purely translate that one because it's just showing the trade relations between the US and China. And it says it has a long tradition. And if you see that one starts from the left 1980s to the 2017. And on top of that, you see the billions and billions of dollars where, yeah, you probably can see the US trade deficit. So in numbers, 375.2 billion US dollars in 2017. That's a huge amount of money. And the only reason, because I showed you that one, is that you maybe see how damn important that one is. And at night, the US futures already tanked, and yeah, a little bit the German DAX got affected, of course, and got a little bit sucked down the road, as you can see this morning. But as the Japanese and, for example, even the Singapore and the South Korean boys, they did not let them get too much affected, and the markets went up the road or got stable. That's where we are right now, and the most important thing for German DAX today is 1430 CET. That's where the non-farm payrolls are going to be released, the non-farm payrolls for the month of March. Okay. Things about saying about the relations, speaking on what has it to do with the DAX. The longer term implications are quite strong, quite heavy, because the DAX will be affected and not to the upside. No, it will be affected to the downside, because all the German international companies from the DAX 30 companies will be affected on that. And I guess most of those are the car manufacturers like BMW, Daimler, or Volkswagen. Okay, as you maybe heard about that yesterday, Daimler had a general meeting. That's why the stock is more than just down. It's just down around 5 to 6% just because of the dividend pay date. But on top of that, that's a few points for the German DAX to the downside. that adds because Daimler is very strong in the index weighting. What has it to do with the technicals? From the technical aspects, this is something like a little bit of a patience move today. You should be waiting, or you should be anticipating a little bit like a sidewards move until the non-farm payrolls are showing up. And yeah, possibly around this date, around 14:30 or a little bit before that, let's say at 14:10, you probably be prepared for a sudden move to the up or to the downside. And as you always are invited to trade some kind of heavy spikes, like we do that from, for example, the Forex market, like the euro, US dollar, or other currency pairs. That will be the same stuff here. If you see a spike to the upside or a spike to the downside, you will be really much invited to have a nice counter trade just to collect a few points and probably be out after a minute or even quicker. That's just from the idea of having a scalp with that around the 14:30 CET release. Most important for the longer term view, on Friday, you possibly will end up where we started. So the Xetra DAX yesterday closed at 12,305. That's probably something we will be hovering around until the end of the day, if the US markets are releasing a really bad NFP data. Why? Because bad NFP data will be having an effect that people think that interest rates stay a little bit where they are right now. If the non-farm payrolls are strong, they are slightly giving the Federal Reserve a little bit more confidence to plan the next hike in June. So that's a couple of thoughts behind that. Let's say something, we don't have any kind of glass balls here as well, but if you look at non-farm payrolls today, we might see a little bit of a weaker number. I will tell you why, because if you look at the weather from the last month, you probably heard a lot of news about terrible snowstorms and stuff like that in the United States, and that's why the non-farm payrolls might be affected a little bit more to the downside. So that's just for giving you guys a hint about what's possibly going on at 14:30 CT. Okay, that's the thing. If you look at the order ladder, of course, we could place something like a trade scenario where we put a pending order, or where we possibly entering a market. Might be really nice today, but in that kind of a market scenery, for me, it's not for opening new trade scenarios. The only thing I could possibly do and could sign for myself is just to moving something like rectangles here to see where a market might be heading to, and where it might be nice to have a short scenario. So I will draw that kind of a so-called blue box, as I always do that, and possibly something like this, like a short zone. And this short zone is around the 12,450s, around that kind of an area. And of course, on the other side, we will draw the same stuff here to the downside as well, probably for a nice reverse or a nice rebound trade around that 38.2 Fibonacci here in that kind of an area. So that might be these two blue boxes where the DAX might be hovering around, and you probably be sure around the 14:30 CT until the opening of the US markets at 15:30 CT. You might be entering a couple of those between those two boxes here, from the downside as well, from the upside as well. Okay, so we probably have a couple of markets we discussed in a few weeks ago, because last week there was Easter holiday. That old stuff, I simply let that old chart simply in the system. It already shows you that the direction we were about to mark with blue boxes are now absolutely around that area here. And what you can do right now is I probably do something like a hook this way. So it might be just showing you that there is another Fibonacci reached as well. That's the 138.2 level. So around that level, and maybe it will be crossing it in the next hours, or it will be try touching it in the next hours. That might be. Possibly you might be having something like a rebound trade here as well. So that's the blue box. It's something like a possible long scenario where you have a reverse trade in direction to the 161.8 level around 157 up the road. That has a lot to do with the current NAFTA status. So the negotiations with Trump and Mexico and Canada are probably taking place the next days and weeks. You always will be hearing some kind of disturbing news, so watch out for bumpy road ahead. But in the end, they need to have something like new negotiations and renegotiate trade relations between those countries, because they are very much affected with the trade with the United States. Okay, that's the. Next stuff is the Bitcoin, where we always talking about just from the technical perspective. Told you that one is going to test maybe the lower band. I should trade Bitcoin myself. I don't trade it, but somehow I maybe mark the direction some kind of right. If you see that to the downside, we will just take a horizontal line just to mark that one. That's the 100. So the starting point on that kind of a Fibonacci analysis, and that's around the 5,850s. So if you are crossing that one, it's going to be getting ugly, because you will see markers to the 138, which is already sub 4K, and the 161.8, which is definitely in direction to the 2K level. So you might be getting heavy, but watch out for on top of that for all that kind of CME margin regulations, if they're going to hike it or if they're going to keep it that way. Right now, I guess it's around 40%. I'm not sure about it, but it's a heavy margin from CME markets. Euro GBP might be very interesting in a couple of weeks and even in the next week. So if you are looking in direction to the next Bank of England meeting, you might be thinking about the last words of Mark Carney, which is the governor or the boss of the Bank of England, and that he said that he might be considering to move interest rates with a step of 25 basis points in direction May, in direction June. Who knows? But he already talked about moving it. So it might be hiking a little bit, so that might be getting some kind of a fantasy, some kind of a nice thought about a stronger pound. On the one side, it might be something like a wish from those guys, but on the longer run, if you see the rate differentials between the euro and the pound, it's going to be 0.75 later then, if they really hike it. Right now it's 0.5%, because euro is 0.0 and the pound is 0.5. So might be getting a bigger rate differentials. Where are the places to look at? Where are the markers to look at? Doing that one with the rectangles again. I just realized that I forgot to change the language. Mea culpa, I'm sorry. Jens, don't kill me. So there are a couple of trading box scenarios from the downside, where we might be walking in direction to 87, 86 50s, where the old longer term Fibonacci resistance is, and then we will be having this one that's too big from the downside perspective here as well, looking at the last low and at the last high here, and just seeing that the 61.8 level is right now touched and left to the upside again, and that's where we might be having a look in the next hours to come, even around the non-farm payrolls, because they are affecting this currency pair as well, because of the euro part. So if you see the downside, it's around 0.8730s, which is not only the 61.8 Fibonacci here, it's a longer term, a really longer term Fibonacci mark around the 0.8735ers, 0.8730s as well. So there is a double meaning of that 61.8, a strong base. If we're gonna get pushed underneath that one, we will be having next targets down the road with a little bit more of fantasy, like I told you with this blue box here, in direction to the 0.8690s to 0.8680s. So that's the scenario from to the downside, and of course the other way around is approximately the same, because it would be something like a retest first of that moving average 200, which is a little bit underneath that 0.88 level. And if you look up the road, you get a lot of targets to the upside. Yesterday I read about an analysis which said that the pound will be heading to 0.92 in the second quarter. So that might be something like they know something more, like we do, possibly, or they're simply having some kind of a really bullish run in favor just because of some political dispute or stuff like that with the European Union and the United Kingdom. Okay, another scenario which is of course very important for it to see for the next hours to come is the most important currency pair. It's Euro-US dollar. Yesterday at the evening, or let's say between the evening and the night, I started that one with 122.38, a long scenario. It got tested almost to the downside a little bit. The stop loss scenario right here is quite easy. It's 122.05. So right now this trade is running. It's a small one. It's just a mini lot here. You're going to be affected when this one is going to be touching the 122.05. Why do I put this one there? Well, it's quite close, a little bit underneath that support one, which is at 122.079. You can't see those resistance and support lines. You might be going to into your navigator, and we'll be finding that, for example, via the navigation, you will be finding that one with the Admiral pivots right here. Just having a double click and just implement that one into your charts. Meanings of pivots, for example, in cooperation, or let's say in combination, not in cooperation, in combination with Fibonacci's are quite interesting. If you see that to the upside, you will be seeing that resistance 1 at 122.79, resistance 2 at 123.20s. In the middle of that, you get a longer term 138.2 Fibonacci, which is a projection, or let's say an extension. And that one is around very close around that 122.95, 123 level. That's the target. That's the target, and as well that there's the moving average 50 where it comes down to that around the 122.95 as well. So that's the target to the upside. If you see it for a longer term perspective, go to the daily chart, just widen that one. You see the multi-year high at 125.56, and you see the high of the last month, or let's say the high of the low of 2018, which is around that one here, the 120.21 54s, 55s. Blue box here as well is that this is a kind of a scenario when the Euro-US dollar is moving in that kind of direction into this kind of trading box. That will be a nice scenario to have a thought about a rebound trade, reversing that to the long side as well with direction of the old highs, going to 124.77, 125.56, for example. So that would be something like having a let's say a hook, not a hook, something like that. If you see that one, might be getting interesting in this kind of a blue box where you have a trade to the upside here. 121.54 is very important. If that one is going to break, we will be seeing 120.80s, 120.79 to the downside to 119.56. Right now, from having the aspect of a trade war or a trade dispute, or however you may call it, in the longer run, Mr. Trump and his administration have no interest to have a very strong dollar. You can assume that if they want to get rid of the trade deficit, they need to trade more and they need to export more. And if you got something like a strong dollar, there's less export, I guess, because you're not something like having a better competition. So the weaker the dollar is, the better it is from the US competition, for example. That's the thing you need to be knowing in the next weeks and months and ahead. If you see something like a weaker dollar, you might be talking about the longer term scenario. And I'm going to the weekly chart and just showing you what a longer term scenario is. This multi-year high around 125.56 is going to be beaten by that very important 61.8 Fibonacci at 125.98. If you go to the monthly chart, I just show you where that comes from. Excuse me, the weekly chart, and just I'm hovering around that one. You can see the 160.18 level. No, let's just draw it just for a short time. Just draw it. You got that 139 high here, and you got the multi-year low, which is around a 103.40, and exactly at that direction, there's the 61.8 level, which is exactly at 125.98. That's why I just marked that one, just for an important base scenario for scratching that 61.8 to the upside, or testing that one in direction. So one test is already the 125.56. It didn't reach out to that one, so it went down again. The next one in the longer term view would be a test of the 125.98 again. Okay, that's exactly the starting point where the euro went down the road, really took a deal. Let's say it like that, because of Draghi implementing and starting his programs of buying bonds and stuff like that, and ABS and whatever the ECB is paying on buying the last years and the next days and weeks and months to come. Okay, I talked a lot, Jens. It's around 11:22. Maybe there are some questions or special market.
No, we are fine, and the time is our limit. So tomorrow is another day, but that is Saturday. So the next business day is Monday, and on Monday we will be back with Jay. So 5 days a week, 5 trading days, 5 different traders. Hope to see you all again on Monday with Jay. Jay is more about the institutional Forex view. So if you'd like to see that, join us on Monday. Thanks a lot. Have a great day, and already now a great weekend, and all the time good trades. Greetings from Berlin.
Bye-bye. Have a great weekend, and of course, sunny days, and relax. Bye.